I want to do something a little different today. Most of what I cover on this channel is rules that are working against you. Penalties, clawbacks, freezes, things you need to defend yourself from. And that's important. But today I want to talk about the other side of that coin. Because right now, in the second half of 2026, there are 4 genuinely significant changes that are working in your favor, putting real money back into the pockets of seniors across this country. And most of the people who qualify for them either don't know they exist or don't realize how much they're actually worth. And I want to be clear about what I mean by real money. I'm not talking about a few dollars here and there. I'm talking about an average of $6,710 in lump sum back payments for 3.1 million people. A new tax deduction that is eliminating federal taxes entirely on Social Security benefits for the majority of eligible seniors. An earnings rule change that is letting people who still want to work collect their full Social Security check without penalty at income levels that would have triggered a reduction just a year ago. And a COLA increase that, despite being offset somewhat by Medicare premiums, still represents the largest guaranteed income increase most retirees will see all year. 4 surprises, all of them real, all of them documented, all of them with specific dollar amounts and specific actions you can take to make sure you're getting the full benefit. But here's the thing about good news in the federal benefits world. It almost always comes with a deadline, a qualification threshold, or an application process. And the money only reaches the people who actually take the right steps. So today's video is not just, here's the good news. It's, here's the good news, here's exactly what you need to do to get it, and here's the deadline you need to know about. I'm Marcus Grave, get a notepad, let's go. Before I get into the 4 specific surprises, I want to give you the context, because the way most financial media covers these changes is either too negative or too vague to be useful. Yes, Medicare Part B premiums went up this year, from $185 to $202.90 per month, a 9.7% increase. That's real, and it offsets part of the COLA for people who have Medicare premiums deducted from their Social Security check. I'm not going to pretend that didn't happen. But here's what the same headlines that focused on the Medicare premium increase mostly didn't explain. The net picture for most seniors in 2026 is meaningfully better than it was in 2025. Not because any one change is dramatic, but because several positive changes landed in the same year. And for people who know about all of them and take action on the ones that require it, the combined effect is significant. The COLA increase, higher earnings limits, Fairness Act payouts, and the new senior tax deduction together create a 2026 picture that is genuinely more favorable for most seniors than recent years, if you know where to look. So let's look at each one in detail. Let's start with the biggest one, because this is the change with the most money attached to it, and the one with the most people who still haven't received their share. In January 2025, the Social Security Fairness Act was signed into law. It eliminated 2 rules, the windfall elimination provision and the government pension offset, that had been cutting benefits for teachers, firefighters, police officers, government workers, and widows for 43 years. And it made the elimination retroactive to January 2024, which meant every single person whose benefit had been reduced was owed back payments covering at least 12 months of the difference between what they received and what they should have received. SSA began processing those corrections throughout 2025, and by early 2026, the agency had paid approximately $17 billion in retroactive corrections to 3.1 million beneficiaries. The average lump sum payment was $6,710. For widows and widowers whose entire survivor benefit was eliminated by the government pension offset, some back payments exceeded $22,000. That is extraordinary. That is life-changing money for people on fixed incomes. And it happened because of a law that took 43 years and 300 congressional attempts to finally pass. But here's the good news that has a deadline attached to it. And this is why I'm covering it again today, even though I've covered it before on this channel. Not everyone has been paid yet. SSA set out to correct over 4 million accounts. As of mid-2026, they've reached approximately 3.1 million. That leaves somewhere between 700,000 and 900,000 people who legally qualify and have received exactly $0 of their correction. Not because they don't qualify, because their case hasn't been reached yet, and SSA is not proactively contacting the people still waiting. And a specific subgroup within that number, widows and widowers whose original survivor benefit application was denied rather than reduced, will never receive an automatic correction at all. Because the automated correction system works by finding approved claims in SSA's database and reversing the reduction applied to them, If your original application was denied outright, not approved at a reduced amount, denied, there is no approved claim in the system to find and fix. These individuals need to file a brand new survivor benefit application. The back payment, if approved, goes all the way to January 2024. For a $1,840 per month survivor benefit, that's over $22,000. So here's what the good news requires you to do. Step 1. Log into your My Social Security account at ssa.gov. Check your current monthly benefit amount against what you were receiving before January 2025. Check your payment history for any lump sum posted since January 2025. If nothing changed and you worked as a teacher, firefighter, police officer, or government employee, or you lost a spouse who did, your correction may not have happened yet. Step 2. Call SSA at 1-800-772-1213 and say exactly this. I want to verify whether my account has been fully corrected under the Social Security Fairness Act, including both the retroactive lump sum and the ongoing monthly adjustment for WEP and GPO. Step 3. Specifically for widows and widowers. Ask SSA this exact question. Does my case require a new survivor benefit application under the Social Security Fairness Act? If your original application was denied rather than reduced, the answer is yes. File that application immediately. Every month you wait is a month of back payment that doesn't get easier to recover. The good news here is real and verified. The action required to access it is specific and time sensitive. If you're in the affected group and you haven't checked your account, do it today. The second surprise is one I've covered on this channel from a technical angle before, but today I want to approach it differently. I want to focus on the actual dollar impact for real people, because that's what makes this good news feel real rather than abstract. The One Big Beautiful Bill Act, signed in 2025, created a new $6,000 senior bonus deduction for every taxpayer age 65 or older. Married couples where both spouses are 65 or older get $12,000 combined. This deduction stacks on top of your regular standard deduction and runs through the 2028 tax year. Here's the good news in concrete terms. If you are a single filer with a modified adjusted gross income up to $75,000, or a married couple filing jointly with income up to $150,000, you qualify for the full $6,000 deduction. That deduction reduces your taxable income directly. And here's the real-world impact that makes this so significant. The IRS uses something called combined income to determine whether your Social Security benefits are taxable. That's your regular adjusted gross income, plus any non-taxable interest, plus half of your annual Social Security benefits. If that total stays below $25,000 for a single person or $32,000 for a married couple, none of your Social Security is federally taxed. The new $6,000 deduction reduces your taxable income, which for many people near those thresholds is enough to push their combined income calculation below the line where Social Security taxes kick in, meaning their benefits effectively become untaxed. According to the White House Council of Economic Advisors, with this deduction in place, approximately 88% of seniors will owe zero federal income tax on their Social Security benefits in 2026. 88%. That is not a small change. That is the vast majority of seniors getting to keep more of the benefit they spent decades building. Now let me address the confusion, because there is a lot of it circulating about this deduction. You may have seen headlines saying Social Security is now tax-free. That is not quite accurate. The deduction doesn't make Social Security universally tax-free. It reduces your taxable income in a way that, for most people at moderate income levels, has the practical effect of eliminating Social Security taxes. But if your income is significantly above the thresholds, your Social Security may still be partially taxable even with the deduction applied. The deduction phases out by $60 for every $1,000 of modified adjusted gross income above those thresholds. For single filers, it starts phasing out at $75,000 and disappears entirely at $175,000. For married couples, it starts at $150,000 and disappears at $250,000. If you're anywhere between those numbers, you get a partial deduction, not zero, but not the full $6,000 either. Calculate your specific number before assuming you get the full amount. What you need to do to get this benefit. If you're 65 or older and you haven't filed your 2025 tax return yet, claim the deduction on your return. If you already filed your 2025 return without it because you didn't know it existed or your tax preparer didn't apply it, You can file an amended return using Form 1040-X to claim the deduction and potentially receive a refund for the taxes you overpaid. For your 2026 taxes, which you'll file in 2027, this deduction is still available. Make sure your tax preparer knows to apply it, or if you file yourself, look for the senior bonus deduction in the deductions section of your return. One more practical step. If you typically have federal taxes withheld from your Social Security check or from your IRA distributions, and this new deduction means you'll owe significantly less in federal tax this year, consider adjusting your withholding now rather than waiting for a large refund next April. You can contact SSA to adjust withholding from your Social Security check or file a new Form W-4P with the financial institution managing your IRA. The good news? This deduction is real. It's available right now, and for most people in the 65 and older range, it is the most significant tax break they've had access to in decades. The action? Make sure you're claiming it correctly, and check whether an amended return makes sense if you already filed without it. This one is for a specific group, and if you're in it, it's a genuinely liberating change. If you are collecting Social Security before your full retirement age and you're also still working, this update affects how much you can earn before SSA starts reducing your benefit. Here's the background. If you claim Social Security before your full retirement age, which in 2026 is 67 for people born in 1960 or later, and you continue working, SSA applies what's called the earnings test. If your work income exceeds a certain threshold, SSA withholds $1 in benefits for every $2 you earn above that limit. It's not a permanent reduction. The withheld amounts are credited back to you as a higher monthly benefit once you reach full retirement age. But in the short term, it can feel like your Social Security check shrinks the more you work, which creates a real disincentive to earn. The good news is that the earnings limits went up meaningfully for 2026. The earnings limit for workers who are younger than full retirement age is now $24,480 per year. That's $2,040 per month. Below that number, your Social Security check is untouched, no matter how much you're working. The earnings limit for people who are reaching their full retirement age during 2026, specifically people born in 1959, whose FRA is 66 years and 10 months, is $65,160 per year. That's $5,430 per month. And at that level, the reduction is only $1 withheld for every $3 earned above the limit, not $1 for every $2 like the standard rule. And at the month you actually hit your full retirement age birthday, the earnings test disappears entirely. From that month forward, you can earn unlimited income with zero reduction to your Social Security benefit. For seniors who are working part-time, doing consulting, or doing seasonal work while collecting early Social Security, knowing the exact 2026 threshold, $24,480 per year, $2,040 per month, gives you a clear number to plan your work income around if avoiding the reduction matters to your monthly cash flow. One more thing on this worth understanding: the delayed retirement credit. If you haven't claimed Social Security yet and you're past your full retirement age, every year you delay, up to age 70, your benefit grows by 8% per year. For someone whose full benefit would be $2,000 per month at 67, delaying to 70 means a benefit of approximately $2,480 per month, a 24% permanent increase for life, guaranteed. That 8% annual growth is difficult to match in any other investment environment right now, and it's worth factoring into your claiming decision if you haven't already. The fourth surprise is the one that already happened, but where a lot of people either don't fully understand what they received, or in some cases didn't receive the full amount they were entitled to. Social Security and SSI benefits increased by 2.8% in 2026, slightly higher than last year's 2.5% increase. That increase was applied automatically to every Social Security and SSI check starting with the January 2026 payment. For the average retiree, that 2.8% increase translated to approximately $56 more per month, bringing the typical check from $2,015 to $2,071. For married couples receiving combined benefits, the average monthly increase was approximately $88, bringing the average couple's combined benefit to around $3,208 per month. Now here's where I want to spend some time, because the COLA story is more complicated than the headline number, and understanding the full picture helps you know whether your specific situation is better or worse than that average. The Medicare offset. For most people who receive Social Security and are on Medicare, the Part B premium is deducted directly from their Social Security check. In 2026, that premium went up from $185 to $202.90, an increase of $17.90 per month. That $17.90 premium increase directly offsets part of the average $56 monthly COLA gain. So the actual net monthly increase for the average Medicare recipient is closer to $38 than $56. Still real money, about $456 more per year, but understanding the net number matters for your actual budget. There is a federal protection called the hold harmless provision that prevents Medicare premium increases from reducing your Social Security check below what it was the prior year. For most long-term beneficiaries, this provides a floor. Your check cannot go backward because of a premium increase. But not everyone is protected. New enrollees and people in higher IRMAA income brackets are excluded from hold harmless, which means in some situations, the premium increase can and does fully offset or exceed the COLA gain. For SSI recipients specifically, the 2026 federal maximum increased to $994 per month for individuals and $1,491 per month for couples. Modest increases tied to the COLA, but real dollars nonetheless. Verifying your COLA was applied correctly. Most people's COLA was applied accurately in January 2026, but there are situations worth double-checking. If your benefit situation changed in late 2025, you had a new claim filed, you came off a WEP or GPO reduction, you switched from disability to retirement benefits, or you had any other account change, the COLA calculation for your specific account may have interacted with those changes in ways worth verifying. Log into your My Social Security account and confirm that your January 2026 benefit reflected the expected increase over your prior benefit amount after accounting for the Part B premium change, if applicable. And looking ahead, the 2027 COLA will be announced in October 2026, based on inflation data from the third quarter of this year. Early projections suggest 2027's adjustment may be more modest given recent inflation trends, but the actual number depends on economic data that won't be finalized until fall. The practical takeaway: don't rely on COLA to significantly close a gap between your current income and your expenses. Build that gap through the other 3 surprises in this video, the ones that require action rather than automatic application. Here's what I want you to understand about these 4 changes. For many seniors, more than one of them applies simultaneously, and the combined effect of getting all of them right is meaningfully larger than any one of them alone. Let me give you a specific example of how this stacks. Picture a retired teacher, 68 years old, who spent her career under a state pension system that didn't pay into Social Security, but who also worked other jobs earlier in life where Social Security taxes were withheld. Her Social Security benefit had been reduced by the windfall elimination provision since the day she retired. In 2026, she receives the retroactive WEP correction, let's say $6,710 in back pay, and an extra $360 per month going forward. That corrected monthly benefit then receives the 2.8% COLA on top of the increased base. Her $6,000 senior bonus deduction, applied to her 2025 tax return, reduces her taxable income enough that none of her Social Security is federally taxed this year. And because her total income is comfortably under the $75,000 single filer phase-out threshold, she gets the full $6,000 deduction. In that one scenario, which represents thousands of real people across this country, the combined value of the WEP correction, the COLA increase, and the senior bonus deduction can easily add up to over $12,000 in additional benefit in the first year alone, plus ongoing gains every year going forward. That's not a hypothetical. Those are real programs with real documented dollar amounts that stack directly on top of each other. The action that matters most is knowing which of these 4 surprises apply to your situation and then taking the specific steps to claim each one. Here is your complete action checklist. For surprise 1, the WEP and GPO correction. Did you work in a non-covered pension job and also have Social Security work history from other employment? Or are you a widow or widower of someone who did? Log into ssa.gov and check your payment history and current benefit amount. If nothing changed since January 2025, call 1-800-772-1213. If you're a widow or widower whose original survivor benefit application was denied, ask SSA whether you need to file a new application. For surprise 2, the senior bonus deduction. Are you 65 or older with income under $175,000 single or $250,000 married? Make sure this deduction is on your 2025 return. If it wasn't applied, file Form 1040-X to amend. Plan to claim it on your 2026, 2027, and 2028 returns before it expires. For Surprise 3, the earnings limit increase. Are you collecting Social Security before full retirement age and still working? Your 2026 limit is $24,480 per year. Know that number and plan your work income accordingly. Approaching full retirement age this year? Your higher limit is $65,160, and the limit disappears entirely the month you reach your birthday. For Surprise 4, COLA verification. Log into your My Social Security account and confirm your January 2026 benefit reflected the 2.8% increase. If your account had any changes in late 2025, verify the COLA was applied correctly to your updated base amount. Most of what I cover on this channel is things you need to protect yourself from. Today was about the other side, 4 changes that are genuinely working in your favor right now, with real money attached to each of them, and specific steps to make sure that money actually reaches your pocket instead of sitting in a processing queue or getting missed on a tax return. $17 billion in WEP and GPO corrections still being paid out. A $6,000 senior bonus deduction eliminating Social Security taxes for 88% of eligible seniors. Earnings limits giving working seniors more room to earn without losing benefits. And a 2.8% COLA putting real money in every beneficiary's check. Good news is worth acting on just as much as bad news. The difference is the deadline. The WEP and GPO correction window requires action now for the people who haven't been reached. The senior bonus deduction expires after 2028. The earnings limits reset every year. The COLA was applied in January, but verifying it was correct takes 5 minutes at ssa.gov. If someone you know is collecting Social Security and hasn't heard about any of these 4 changes, send them this video today. The money is there, the rules are real, the action steps are specific. Subscribe to this channel. When good news happens in the Social Security and IRS world, I'll make sure you hear about it before the deadline to act on it passes. I'll see you in the next one.